This is Finance Disrupted. Look closer at trends transforming the financial services industry. Swift announces Global Payments Initiative, its latest response to blockchain startups in the payment space. Swift is the financial industry's de facto gold standard messaging service, used by more than 11,000 industry participants. That's basically any bank you can think of. At the Cybos 2016 event in Geneva, Swift announced that it had completed the first phase of its GPI pilot, a new set of standards which would improve transaction speeds and transparency. So expect cross-border bank transfers to complete near instantly or within a day, as opposed to the 5 working days it takes currently on the Swift system. This, of course, is a direct response to the rise of blockchain startups like Ripple, which provide a service similar to Swift, only faster and arguably more secure. The advantage that Swift has over Ripple is its massive member network and an entrenched position as the industry standard. What it's trying to do is replicate the efficiencies of a blockchain by building technology solutions which mimic the functionality and benefits. This is an important development because the transition to radically newer technologies will not be total and certainly won't be overnight. By incrementally approaching the efficiencies of a blockchain system while still remaining in the existing ecosystem, financial services firms can plan that transition journey and, more importantly, its impact on the firm's culture and operations with a lot less pain. On a transformation journey, it's not the maturity of a technology that holds us back, it's the challenge of pivoting from our embedded ways of working that often become the biggest roadblocks. Commonwealth Bank and Wells Fargo complete the world's first trade finance transaction on the blockchain. The two banks combined a slew of technologies, including distributed ledgers, smart contracts, and Internet of Things, to facilitate the trade of a shipment of cotton from the US to China. The banks collaborated with blockchain startup QChain, using its platform for the transaction. Now, a major caveat to this development is that the trading parties in this transaction were actually sister concerns: Brigand Cotton USA selling goods to Brigand Cotton Marketing Australia. So naturally, a lot less complexity to work with than in a transaction with distinct counterparties. Having said that, it is no mean feat that two banks and their respective counterparties were able to communicate and execute an actual real-world transaction on a common automated platform outside the ambit of traditional intermediaries. All parties were able to geographically track the location of transit goods in real time, and with the help of smart contracts, automatically trigger a notification to release payment based on the GPS coordinates of the shipment. This is a massive step up in terms of transparency as well as efficiency compared to traditional cross-border trade instruments like letters of credit. Think reconciling individual paper-based ledgers, reams of documents to prove authenticity and ownership, and other manual processes which are slow, expensive, and susceptible to errors. This is a win-win for all parties involved, and while it is a tremendous improvement over current processes, it does feel like a long overdue disruption in this age of information. Here's hoping for more action in this space. If you found this video informative, hit the like button. If you want to see more such videos, hit the subscribe button. Start conversations by sharing this video and let me know your thoughts in the comments below on LinkedIn or on Twitter. Remember, what is now proved was once only imagined. Thanks for watching.